Craig Drummond, welcome to Business Spectator.
Thank you.
Look, I'm going to start off with, look, subprime fears have eased and there's talks of global recovery and green shoots, and then all of a sudden we get hit with sovereign debt fears coming out of Europe. Would you say the sovereign debt is a very serious threat to the global economy?
Well, I think it reflects the shift that we've seen where debt has been shifted out of the private sector and into the public sector. Mm-hmm. And as a result, leverage in any part of the economy needs to be dealt with carefully. Mm-hmm. No question, given what's happening in some of the European countries, it is a risk to economic recovery because until those leverage ratios, whether it be debt to GDP or whether it be current account deficits, whether it be a number of those macro issues are dealt with, it's very hard to see the credit creation cycle recover, employment recover, and out of that consumption recover, and you get that self-fulfilling growth in an economy.
What sort of impact do you think it might have for us, for Australia, if this is not controlled and if it balloons out of proportion?
I think we go through periods of risk aversion, and we've seen in recent weeks, partly coming out of what's happened in Europe, we've seen investors becoming all of a sudden, or wanting to shut down risk and risk appetite. So Australia, as an economy that is levered into China, levered into the resources sector, is perceived to be a higher risk return economy. We've seen our currency fall away sharply. We've seen our stock markets fall sharply. So I think until we get to a more sustainable position in the global economy, where leverage is taken down a notch, we're going to go through these periodic bouts of risk aversion. And as I said, we're just going through one of those at the moment.
Now, understandably, in the wake of the crisis, we have regulation coming in on a government level, whether it's the US or in Europe now. Look, in your mind, are the governments going a bit overboard with regulation? Are we getting into a phase where there will be an over-regulated market, and what consequences might that have for the banking sector in general?
You raise a good point, because it's clear from the market failures of 2007 through to 2009, that there needs to be changes in the financial system, and governments all around the world are well and truly onto that. But equally, we need to be very measured to ensure that we're attacking and addressing the issues that really did lead to the problems that we saw through that 24-month period and the ongoing problems that we have, rather than attacking parts of the market that are perceived to be so-called risky, but really didn't have any part to play in the problems that were that we had. Now,
with regards to banking in Australia, now our banks, the Australian Big Four banks, managed to actually ride through the crisis in a pretty good shape. And the federal government recently, have introduced measures to boost competition in our sector. Now, does that open up an opportunity for US banks to perhaps come back to the Australian market?
Well, the US banks haven't left the Australian market. We have been participating substantially, particularly in the corporate banking markets in this country. And when you look at the concentration and the strength of the major Aussie banks in the retail banking part of the market here, I can't envisage you seeing a substantial onslaught of American or indeed European banks into Australian retail banking. But when it comes to the major corporate banking opportunities here, and as it relates to Australian companies going into international markets, we see there's a great opportunity, and we're continuing and will continue to expand our bank in Australia. We see it as really quite a fertile market.
Look, in summation, we're at a future summit. We're looking at, we're trying to get some sort of a sense of what lies ahead in the next 5 to 10 years. With regards to the global banking sector, banks have been, in some respect, vilified. They've become the face of what led to the demise of a financial system. Where do you see the banking sector? What has the banking sector learned from this financial crisis, and how are they going to move ahead?
I think the banking sector, there are clearly parts of the banking sector where the risks that were being taken were inappropriately priced. And so I think firstly you'll see parts of the marketplace reprice so that credit doesn't grow to the extent that it did in the 05, 06, 07 period. Clearly there's also been, there needs to be a reassessment of the risks that banks and our customers were taking when we engaged in some sorts of businesses. Subprime lending is clearly one of those issues. Thirdly, it's not simply banks, it's regulators, governments, individuals, corporations and banks working together collaboratively that need to learn from the mistakes of the previous couple of years. And I think it's instructive, therefore, to look at Australia and how Australia performed through that period. Now, while one can point to and say, well, housing markets here didn't fall 25 or 30%, and we had the benefit of China, the reality is, though, that whether it be APRA, whether it be other regulators that we had here, were much more vigilant in the way that they conducted their review. And secondly, subprime lending in Australia only got to 1% of the total housing market, whereas it got to 15% in the US. So I do think there are lessons for the global markets to learn from the Canadian regulators, from the Australian regulators that did it well, and for those parts of the world that didn't do it so well to take note where there were practices adopted that can be imported into those economies.
Well, Craig, we'll leave it there.
Thanks very much.
Thank you.